Um, Thanks for joining for another video. Today, I want to talk about higher highs, higher lows, elbows, pullbacks, whatever you want to call it. That's what we're going to be talking about today. Okay. So, in order to identify whether a market is bullish or bearish, you need to be able to identify which direction it is heading in currently, right? Whether it's had a shift of structure, whether it's going bullish, whether it's going bearish, so on and so forth, right? Now, the way that we've been taught elbows, if you follow Alex, then you have learned the snake trick. And the snake trick is basically when you follow a market until it creates a movement in the opposite direction, and then it continues to head wherever you want it to go. Okay. Now, the snake trick is nice to identify obvious elbows, but when it comes to certain situations, it becomes very, very difficult to identify the direction of a market, right? Now, I'm going to be using the monthly time frame as an example, but the monthly time frame can be a little bit misleading sometimes because we're looking at it in such a high time frame. Now, these elbows, they are a lot more available, relevant, and a lot more noticeable on the lower time frames. They happen a lot more of the time. So we're just going to be going through GBP NZD to identify different scenarios of single candlestick pullbacks. Okay, so these are the one candlestick pullbacks, and I've created a set of rules to identify these type of pullbacks. Hopefully, these rules help you identify the direction a market is heading in, and possibly even um, help you grow as a trader and as somebody who can read the markets a little bit easier. Now, at first, when I first started to read market structure, it was very confusing to figure out, has the market shifted bullish, has it shifted bearish, and hopefully these rules that I've created will make it a little bit easier to identify market structure. Now, we're going to start off with rule number one or scenario number one. This will be when the pullback candle, right? So in order for a market to move, say bearish, we have to have lower lows and lower highs. Now the lower high happens when we have a pullback. Okay, so we want to be selling from lower highs and catching the move down to lower lows. And as soon as the lower high gets broken, price has shifted to the upside and will now create higher highs. Okay, so basically the pullback, which is what I'm talking about, is this move to create the lower high or the higher low, whichever it might be. So in scenario number one, the pullback candle engulfs the previous candle. Okay, and I find that to be effective a couple of about like 9 out of 10 times. Now here on the monthly time frame, it's going to be nearly impossible for us to identify these or for these to be solid market structures. Okay, if we zoom in on the weekly time frame, on the daily time frame, on the 4 hour time frame, these become much more relevant and they become a lot stronger structures. But the monthly time frame doesn't really move. It doesn't really respect these type of elbows. In fact, the monthly time frame doesn't really respect structure at all. Okay, but we'll identify these on the monthly time frame, and then we'll zoom into different pairs, and I try to identify them and find examples on lower time frames. And hopefully by the end of the video, you are able to apply these rules to your own charts. Okay, so let's try to identify pullback candles that engulf the previous candle. I think I marked these off in green. Okay, so let's zoom in and find the green circles. Okay, so here we have this blue candlestick. We can kind of see that the market is heading in the downwards direction, but this blue candlestick here, this pullback candlestick, engulfs this little red candlestick. Okay, so it's creating a separated structure. It's no longer so if the market's heading in the downwards direction, let us mark this off as a red candle. Okay, we have red candle, and then we have a pullback candle. Okay, then we have a pullback candle and another red candle that follows. This pullback candle, once we draw it out, will engulf this this previous red candle. Okay, so it created a structure that is separate from everything else around it. Let's add some wicks in here to make it look better. The wicks will be off center, but there's nothing we can do about that. That's annoying. Okay, so this is kind of how it would look. Wow, that really gets on my nerves. We'll make it look like this. There we go. So basically, and then the market continues to head to the downwards direction. Okay, this right here is a scenario number one elbow. So we have a we have an elbow, we have a pullback, we have a lower low, pullback, lower low. This is scenario number one. So we can identify this right here as a pullback candle, and the following candle kind of continues the move to the downside. Now, same with this red candle right here. So it engulfed the previous blue candle, and then price continued to go in the other direction, right? And now let's keep in mind that this is only for single candlestick pullbacks. We can talk about 2 or 3 candlestick pullbacks a little bit later in the video, okay? Now, this red candlestick here is also a pullback candle, and it engulfed this blue candle here, okay? So this is a few examples of how the scenario number one or rule number one is applied, okay? Now let's go along this way, and that is it. There's no other single candlestick scenario scenario one candlesticks, right? Scenario one pullbacks. Hopefully this right here makes a little bit of sense. We can, throw in wick here and then wicks towards the downside. Copy, paste, so on and so forth. Okay, hopefully that makes sense. This is scenario number one. Now, scenario number two, we can zoom in right here. Scenario number two is when the pullback candle does not engulf the previous candle, but the following candlestick doesn't engulf the pullback candle either. Okay, now that sounds a little bit complicated, but we'll break it down. And I find this to be effective 8 out of 10 times inside of the markets. So let's pretend that, let's do an example and then we'll try to identify it in the markets, okay? So we'll pretend that this candlestick here is a smaller one, okay? It's a smaller candlestick like this. Can have a big wick, can have a small wick, it doesn't matter. But this following candlestick that is not the pullback candle, okay, ends up doing this number right here. It ends up closing as a small little doji. And then the following candle then has the remainder of the move to the downside. Now, bear with me as I try to explain this. This right here has created a pause in the market, okay? It created a structure that didn't instantly continue to the downside, right? So price was creating price was creating a lower low, created a lower high, and then created a lower low right here. Hopefully that makes sense. And now let's try to identify that in these markets. Here is a scenario number two, right? Where the market had a structure to the downside, but instead of and after, oh, would you look at this right here? This right here is a scenario number one where we have the blue candlestick engulfing the red candlestick, and then the move continues, okay? So we have 2 of these elbows back to back. This elbow right here is considered an elbow because the move didn't just continue right away. It wasn't something like this where price just had one candlestick and then continued to go lower. It wasn't something like this, right? This is not even price didn't slow down, price didn't stop, price didn't reverse. It just kind of didn't do much. It just kind of, had a tiny little pullback and then continued to go lower. Same thing with right here, okay? But here, price failed to have the move or the continuation immediately, right? It didn't continue to have the move immediately. It pulled back, messed around for a couple of days, or for in this case for a month, and then it finally had the continued move. So this right here, if we zoomed in, would have a more distinguished structure within it, okay? Hopefully that kind of makes sense. So this is scenario number two. This right here is also scenario number two, where we have the pullback candle, and then price didn't instantly engulf the pullback candle, but then it continued to have its move. Let's delete this so we're not confused later on. And over here, there's a few more examples where price is heading to the upside. We have the pullback candle, which, keep in mind, did not engulf the blue candle. If it did engulf, and we'll kind of go into that later on, it would be scenario number three, which combines scenario number one and scenario number two. Okay, so just focusing on number two, price had the pullback and then failed to instantly have the continuation, but it did eventually have the continuation. Same with right here. Price is going up, has a push to the downside, pulls back, and then fails to instantly engulf again. But it does have the continuation to the downside later on. Okay, same thing with right here. We're clearly bullish. We have a single candlestick pullback. Price struggles to push up, and then it continues to push up eventually. Okay. Now, this right here is an example of scenario number three. Scenario number three, we can take a look at it right now, is a combination of number one and number two. And I find this one to be one of the most effective types of single candlestick pullbacks. Okay, now let's take a look at why this is effective and what makes it a combination of the two. Rule number one states that the pullback candle has to engulf its previous candle, which is right here. And then rule number two states that it doesn't have to, but the following candlestick is also not engulfing straight away. Okay, so if this candlestick right here had instantly moved to the upside, well, here's the example. They're back to back. Okay, this right here is scenario number three. This is scenario number two, and we can identify scenario number one somewhere over here. It's a little bit harder to find now that we're further away, but yeah, scenario number three, scenario number two, and hopefully that makes sense. Now, we can clearly identify, actually, let's draw it out, and then we can go and identify a few other examples. So scenario number three would be that this candlestick engulfs, right? This candlestick engulfs the previous candle, and then this candlestick here fails to instantly have the push to the downside, and this candlestick then has the continuation. Okay, now you guys don't have to use these rules. I just figured that this might be helpful to some people who are struggling to identify market structure. You guys are asking me, oh, is this right here an elbow? Is this right here an elbow? So tell me, now that you know these rules, is this right here an elbow? I would say no. Why? First of all, the blue candlestick didn't engulf the previous candlestick. And second of all, the red candlestick did engulf the blue candlestick. So it doesn't fit into either one of those categories. Same with this. Blue does not engulf, red does engulf. Okay? But what about this right here? Well, this right here is not a single candlestick pullback. It is two candlesticks. So this is a clear elbow, right? It's more than one candlestick. This doesn't fit into my rules. It has its own separate pair of rules or set of rules. And this here you could use the snake trick, right? Price is going down, it's going down, and then it has a pullback, and then it continues to go in the same direction. Okay. Hopefully that makes a little bit more sense. Now we can zoom in. Let's kind of clear this stuff out, and then we can zoom in and identify. We'll do that later. We can zoom in and identify some of these things on the weekly time frame. Okay. Well, how do we identify this on the weekly time frame? All right, let's start from right here. Let's start from right here. Okay, we are heading to the downside. Actually, we're bullish right here, okay? We are bullish right here. Let's do the higher high and higher low trick. Higher high, higher low, okay? Now we can clearly see already that we are starting to apply our rules. So we'll start from right here because it's clear. It's clear that we've broken below this point. In fact, I would count this as an elbow. This would be scenario number one. Okay, so actually, let's start from right here. This is hilarious. Okay, so first of all, this is the lower low, and then we all of a sudden broke above this point here, and we created a higher high. Okay, so which structure would be the new higher low? Would it be structure one, structure two, or structure three? Well, to me, it would be structure three. This is scenario number one. We had the red candlestick, the single candlestick pullback, engulf the previous blue candle. Okay, so we're bullish, then we switch, we break below, we go bearish. Okay, this is our lower high, and this is our lower low. Okay, so at what point do we break above, or do we break below our structure? Well, we broke below right here, so this is the new lower low, and this is the new lower high. Okay, well, actually, which of these is the new lower high? Is it structure number one, structure number two, or structure number three? In my eyes, according to the rules I created, it would be structure number three, right? Because structure number three has a one candlestick pullback, and then, in fact, the following candlestick does not engulf. So this is the scenario number three, where the blue candlestick engulfs, and then the red candlestick does not engulf. Okay, so this is the higher lower high. This is the lower low. Then we break above. Okay, we break above, and we create a new higher high. Okay, this right here is not an elbow, but this is an elbow. It's scenario number one. The red candlestick engulfed the blue candlestick. Bam. Okay, higher high, higher low. And then what happens? Then we break above this point. Which of these points here is the next higher low? Well, to me, it would be this structure point right here. Very, very clear. And this is the higher high. Okay, then we broke above, we create a new higher high, and then we create the new higher low. This is a clear elbow right here. Okay, higher high, higher low. Okay, then we shifted bearish. So we have a lower low, and then we have a lower high. Then we go bearish even more. Lower low and lower high. This is a two candlestick pullback. And then we shift bullish. We have a higher high and a higher low. And then we continue higher high and a higher low. And then we continue even more. Higher high and higher low. At which point we then break even higher, higher high, higher low. Higher low is right here. And this leads us to where we are right now. Okay. We have a higher high. And which of these structures here is the higher low? Is it structure number one, structure number two, or structure number three? Well, to me, this is the, it kind of gives it away. I already have the weekly marked off as bullish from this point up to this point right here. Okay, so this would be the higher low, and then that would be the higher high. Okay, now the reason this is the higher low is because it is a scenario number two type of single candlestick pullback, where the red candle did not engulf the blue candle, but the blue candle did not engulf the red candle. Okay, hopefully that makes some kind of sense. And obviously, when it comes to these type of elbows, they're very, very visible. Multiple candlesticks, lots of structure, and it becomes a little bit simpler to identify. But when it comes to these type of things, the single candlestick pullbacks, I've seen Alex in previous boot camps, in previous market updates, in previous Sunday swings. He uses single candlestick pullbacks as structures, even though his rules do not include those type of structures. Okay, so that's basically it. Quick little announcement. We are starting the new subscription services next week, right? So we obviously have the TradingView Confluence tool, which is a great tool if you want to use it. I have it on my computer as well. I have the lifetime access, okay? Very, very nice. Now, if you scroll to the top of the website, you have the signals subscription. This is where Freddie and I This is where Freddie and I have partnered to create our signal subscription service, Trade Unafraid Signals, powered by the TradingView Confluence tool. That is going to be available starting next week. And it costs $150 per month. Okay. My computer is lagging now, but last but not least, we have the Trade Unafraid community. If you guys are interested in learning, there's a picture of me right there. You have the live market updates that starts next week as well, and the one-on-one mentorship. Okay, so these are all services that we offer. Thank you guys for watching this video. Hopefully you learned something. Go ahead and like, subscribe if you guys want to see more content like this. Join the Discord, which is in the website. It is www.tradingviewconfluencetool.com. I hope you guys have a great weekend, and I will do a update on the funded account probably next week or the week after. I might take a little break from trading that account simply because it's been a rough couple of weeks in the markets. But yeah, I appreciate you guys, and I'll see you in the next one.